With earnings finale being NVIDIA, and a blow-it-out quarter and a promise of a 10-for-1 split, will this propel the markets to move higher? Let's go. This week on SPY, we saw a doji candle, which signals indecision for traders. Now, I always hate talking about doji candles because at a top of range, they can signal that the market is ready to reverse, or it could just be a pause as markets decide to move higher. I know what you're saying. You're saying thanks, Captain Obvious, for stating what the market can do almost any week. But unfortunately, this doesn't provide any clear direction looking at the candle alone, so we'll need to dig a bit deeper in this video. Now, the big item on the calendar this week is PCE, and it's on Friday. And being that CPI and more importantly PPI are already known, is this priced in? Or will the markets be waiting to make a statement on this Friday as we close the month of May? The typical sell in May and go away has been anything but typical, and summer typically favors the bulls, but this election year has been anything but typical, so why stop now? Together, let's unpack the levels of support and where exactly is resistance. Looking again at the weekly, we noticed that volume was lower than average, and I pointed this out last week as I said, going into a holiday weekend, it was likely to be low, and this certainly didn't disappoint, as this was the lowest volume the market had since Thanksgiving, and that only had 3.5 days of trading instead of 5. So this means even though this doji candle saw some bouncing around, the sellers, well, they didn't have conviction, and taking profit is normal, and just because we have a doji, it isn't cause enough to start dumping your investment portfolio. And as we look at this rising 5 EMA on the weekly, we see that this has been acting as support, and this week it didn't disappoint. And if we flip on our Bollinger Bands, we see that SPY with its upper Bollinger Band still has some room to move to the upside. Now that we're in blue sky territory, for many chartists, it becomes difficult to predict where we're likely to run to, as they don't have any other key support or resistance levels to draw off of. But if we take it down a level to the daily, we can go ahead and look here at a Elliott wave count where likely we have a first wave, a second wave, a third wave, and then right now maybe we're in the midst of some type of fourth wave on the daily, where maybe, we'll likely conclude somewhere in this area only to move a fifth wave higher. And this fifth wave higher should be similar in size and duration to this first wave. So if this plays out and we truly are in a fifth wave to the upside, we likely come up into the area of 540 before we stall out. So this means that this 524 area is a very key level of support. And if we lose this area, and I'm not talking about a spike and then a reversal, as that is normal whipsaw behavior, but rather a close below and then a confirmation, well, we're doing something other than a fifth wave higher. Also, I don't know if you can see it here, but if we look very carefully, we can see here that the market left this gap open. And when it was down here, it could have spiked through this 13 EMA and held that area, but it decided not to fill that gap. So is this unfinished business by less than $1 something where the bulls got excited and they took off before people had a chance to pile in? Or are the bears just setting a bull trap? Now, one other thing on the daily is that these type of breakdown candles become very important. If we go ahead and add our Fibonacci levels for this candle, we can see here that we came into the golden pocket area and have not broken out of this area yet. So we could always come into this golden pocket area and reverse lower and continue to ping pong around. But one thing for sure is if we're able to get above this breakdown candle high, likely the market will squeeze out its shorts on the way up to 540. Flipping back to the weekly, we talked in the last several weeks about this MACD crossing below its signal line, and here we actually see that it's come up and really almost kissed the signal line here. So are we maybe thinking about crossing above this signal line and continuing the bull trend? Or as we saw in last summer, are we going to come up close enough to kiss this, but then go ahead and lose it? Thanks for joining, and that's all I have for now until the next video, and we'll see you then.